Hello everyone and welcome to Onchain update for the 22nd of September. So what I want to cover today is put out a tweet thread yesterday, which I thought was quite interesting, just poking around many of our on-chain activity metrics. And what I found is something that's quite interesting. It's a really good kind of time and a reason to explore a concept you'll hear me talk about all the time, which is payload. And really that's breaking up activity versus volume metrics. Now, previously these tended to move in tandem, but since the rise of inscriptions, we've actually seen a slightly different dynamic. So I want to kind of explore this, just show you where we're at and how we can really think about on-chain activity metrics, because I really do think they're a very simple but also underappreciated set of tools, and a really good way just to understand where things are at. And the nice thing about this, it's broadly applicable to any crypto asset that we're looking at, but obviously Bitcoin's a good case study. So generally speaking, on-chain activity metrics, and we're talking about active addresses, transaction counts, volumes, things that describe how live the chain is, they come in two flavors: activity, and think about this in terms of like user base, transaction counts, active addresses, active entities, things that describe how many events have happened, counts. And then we've got volume. Of those counts, are they moving around large monetary value? And obviously from a market-based perspective, lots of volume is preferable. You can have lots of activity, which is what we're going to explore today, but if there's no volume, I would put a bit more weight on the volume side of the equation. So really looking at them both in tandem is, I think, quite useful. So we're going to start by looking at the mempool, which is really the backlog of transactions waiting to be confirmed. We're going to explore things from the activity and the volume side and just show you how those two are actually showing a fairly divergent response right now. And then we're going to move across and have a look at what's going on with inscriptions and the like. So let's get stuck into it. Okay, so here we are on mempool.space, which I've heard some people refer to as the front page of Bitcoin, which I'm not going to lie, I think that's probably about true. So mempool.space is great. I mean, like in terms of mempool metrics, it's kind of the best in class. And what I like here is, what I've really seen is that if you get down to April 23rd, kind of late April, we have seen the mempool be congested ever since. So we saw the initial burst, just to put this in a bit of a price perspective. Obviously, 2023, we've pretty much from January, it was pretty quiet. We got the initial burst and a short squeeze that broke us above that initial FTX sell-off. In fact, there's FTX back here. So the sell-off, here's the doldrums, and here's the first rally out. Now, this giant spike here was when ordinals and inscriptions showed up in March. And you can see that was kind of this initial burst. Everyone wanted to get, inscription number 1 through to 1 million. And then that really started to cool off. And then this period here was the burst of BRC20. And this is, I don't know whether this thing's got much room to run. I don't really know. But this is all text-based inscriptions. And as you can see, the mempool has now been full for over 5 months. And when I say the mempool is full, it basically means that it hasn't fully cleared. And technically, you never fully clear the mempool because there's almost always a transaction waiting. But we use these terms on a relative basis, right? Here, there's just a persistent backlog of transactions. So we can see that the network is alive. There's a lot going on. There's a lot moving around the chain. The Blockspace demand is fairly substantial. And if I go back to the homepage, it will tell us that we're actually purging. So this means that a standard mempool has 300 megabytes in it. That's the amount of data that's kind of sitting there waiting to be confirmed. When it gets to that 300 megabyte limit, it will start getting rid of the 1 sat, then the 2 sat, then the 3 sat, all the transactions that are paying, because otherwise, if you just let the mempool get too big, people's hardware crashes. So by default, it will purge all of the low fee paying transactions and just keep 300 megabytes of the of what we call the highest fee paying ones. So there's 452,000 transactions waiting. Mempool.space does run a mempool with a much larger size, but this here is still going to be based off the standard 300 megabytes. So all in all, we have a very full mempool. We've got full blocks and have done for about 5 months. So now we're going to touch on activity-based metrics. Again, these are all talking about the user base, how active the chain is. These are really, I think they're massively underappreciated on a macro scale. You'll see that I love to use momentum, which is just the 30-day versus the 1 year. Obviously, the trend of these is going to tell you information, right? This is obviously Moon Mission. This is Doom Mission. The magnitude, when we get these deep pullbacks, you can see this is the end of the bull. When this thing collapses the way that it did in 2021 and in 2018, that's the end of the bull. It's over. And the cut below here is generally a good signal that things have changed. And obviously, the slower moving averages are going to be slower, naturally, but higher conviction. Now, we are pushing to new yearly highs. In fact, we're pushing to multi-year highs. You have to go back to pretty much the sell-off. So we are now in bull market territory, right? Relative to where we were back here, active addresses is really getting some upside momentum. So, I mean, active addresses, again, that's a non-payload metric. In theory, they could all be moving around a small amount of value, which we're going to explore more in more detail in a second. On the transaction count front, you have to look at this in the exact same light as active addresses. I mean, we are pretty much at all-time highs. We are not far from, on a 30-day moving average, of course. I mean, this thing is really tearing higher. So each block is full of more and more transactions, 500,000 per day. So that entire mempool, in theory, should be cleared per day, but there's obviously more coming in over and over and over again. Now, the reason why, notice how we've blown out the tops from the previous cycles. This is because of the witness discount. This is because of how many transactions are able to fit in. We're getting closer to the 4 megabyte transaction limit because of the SegWit discount. And again, this is our first hint. Back here when it was all monetary transfers, I won't go into the technicals of block weight units and all that kind of stuff. But long story short, this was pretty much the ceiling of the amount of normal monetary transactions we can fit in a block, even with the SegWit discount in place. This is what happens when you actually start filling more of it because there's more inscription-based transactions. And again, we'll touch on this in a bit more detail. But if you were to just look at these metrics, you'd say, hey, we're off to the races, right? Clearly, the user base is exploding higher. Now, on the fee pressure, I like looking at fees. This here is the revenue Z score. So really, this is going to help you normalize and understand where we are in the cycle. I'm just going to turn on the 1 year to explore this. In fact, no, I'll put on the 4 year. So the reason I use a Z score is it's giving us a statistical gauge, right? Obviously, high values means that we're in very high fee environments. Low values, the opposite. You can see here the collapse. This is at the same time that active addresses and transaction counts fall off a cliff. Fees also fall off a cliff. The bear market is in place. When this happens, it's all over Red Rover. Now, we are slowly starting to tick a little bit higher on the 4 year. Now, why do I use a 4 year? Well, in 4 years, we've gone through bull and bear. So the measuring window for this, what is statistically meaningful, think about it like a long-term moving average. It's going to be much slower, but when it happens, it's much higher conviction. This is an uptick in fee pressure. If we put a 3 year on, you can see it's fairly similar. It's going to be a little bit faster, a little bit more responsive, but generally speaking, telling us a similar story. Now, a 2 year is where it gets quite interesting. I'm actually just going to turn off the 3 for clarity. The 2 year, what happened 2 years ago? Well, we're coming off the back end. We're pretty much in bear market territory. So the 2 year is going to be nice and responsive for when the tides are turning, because it's not looking at the previous bull market. It's looking at when do we have an uptick relative to our, what came before, which was a bear market. So we're starting to see a bit of an uptick in fee pressure as well on the 2 year. This is starting to tell us we've got some momentum in terms of fees. And the 1 year is obviously going to be the most noisy because it's comparing to, within 1 year, you've got pretty much just bear or bull. It's kind of very whipsawy. But as you can see, it will move much, much faster and start to we are also breaking above on this level. So all in all, this is telling us that we have a statistically meaningful set of fees. It's not exactly a moon mission, right? Which is what this was. This is when BRC 20 came out. So there's fee pressure, but it's also not explosive, right? It's steady. That's probably the right terminology for it. It's steady. So now we're going to move and have a look at the volume side of the equation. This is where it gets really interesting. So let me just turn dominance off because we don't need that. So this is looking at the USD volume settled on chain. In the orange, we've got total. In the in the light orange and the dark orange or the red, we've got exchange flows. Then we've got revived supply, coins older than 1 year. Now, we don't really care about, in fact, let's just turn off revived supply. It doesn't matter for this. The takeaway here is actually very simple. There's not much volume moving around the system, is there, on a USD basis? We are back to 2020 levels, albeit the top end of the range, but and it's at the low from the cycle. We are pretty much down at post-FTX start of the year levels. There's just not much volume moving around the chain. Exchange flows are also down. So even though our mempool is full, we don't have a lot of volume. So this is starting to get a bit peculiar. Keeping with our momentum chart theme, let me just give this a little bit more depth. So here we're looking at that transfer volume in a momentum chart, and you can see we are like cyclically low, right? Really, really low levels of volume. This is in BTC denomination, so we can compare it between cycles. Everything is looking pretty lackluster. There's just not that much volume moving around the chain. Most certainly, it's in negative territory. If we look at it purely from the exchange volume, now the reason why I like to look at exchange volume, the reason for this is it's essentially showing us the trade, right? I mean, in a bull market, let's face it, people trade more, right? So there's more volume. It's kind of a nice way to look at these things. We're up, but we're not really that up. There's been a little bit of trade to start the year, but it's still pretty dull and pretty quiet. Now, probably my favorite way to visualize this is actually Coinday value destroyed. So this is actually a concept that we developed more or less coming out of the coin-time economics framework. And this is basically a volume and time-weighted volume metric, essentially. How much volume and time is moving through the system. And obviously, higher volume and higher time happens during bull markets. And you can see this is generally a fairly reflexive indicator in a bull. It's pretty stagnant through most of the bear and the hangover phase. The bulls really shine as something that stands out. We are pretty low. So that means that there's not a great deal of time moving. We saw that with the revived supply. There's just not much of it. So the hodlers aren't doing very much, and the overall volume is very low. So the big picture takeaway here is the mempool is congested. There's lots of activity. There's lots of transactions. It's not like there's no demand for block space, but it's clearly not coming from monetary value. And based on our fee chart, it's showing us it's kind of a base load of demand. It seems to be willing to pay the lowest fee, but it seems like it's not urgency, right? It's not paying for urgency, which is what we saw in the first round of that BRC20 mania. So, in case you haven't already worked it out, it's because of inscriptions. Now, this is a really interesting dynamic. And, from a philosophical level, I've actually come around to inscriptions. And, you'll hear me talk about on-chain analysis. It's kind of a lens into our market psychology and how we perform relative, how we behave given profit and loss incentives. Well, in many ways, inscriptions is kind of just a calendar. It's a way of us like leaving snippets and oddities of our life. Some of it's, in fact, most of it's junk, but some of it's probably going to be pretty interesting. It's like a time capsule. Bitcoin's almost like a golden record that we send into space. It's a database that nobody can reverse, and things get put in there for whatever reason, right? If someone pays a fee, it's kind of like graffiti. People are just putting graffiti on Bitcoin. If you don't look at it, you don't see it. But it's there, and it's kind of like a record of history, and I like that. It's a timepiece for whatever reason. Again, most of it's junk, but it doesn't really affect. I mean, it's paying a baseload fee. So in terms of the amount of inscriptions, the blue is text. So you can see there's the initial burst that we had in March and April of images. This is when people are uploading monkey JPEGs. Text has blown it out of the water. Now, I have heard, and in fact, I've had a look at it. There's a BRC20 token called Sats, which is basically there's one for every sat in the, it's kind of the same number as sats, but yeah, it's all too complicated for me to understand. But the whole point is that's coming to the end of its issuance. It started back here, and people have been just minting. It's apparently, I saw some analysis the other day. Apparently, people have like millions of transactions have been associated with this Sats thing, and it's coming to the end of its issuance curve. Which is kind of bizarre. I don't fully understand it. So we'll see whether this maintains. Let's assume that it does, just for the case of this argument. But certainly I suspect within the next month or 2-3 months, we will know whether the conclusion I'm about to describe is true or not. We will get evidence of that. Now, this is where it gets kind of interesting. So in terms of the total number of transactions, 50 to 60%, right? That's kind of the order of magnitude we're talking about. I mean, it spikes down to 30, but we're regularly hitting 30 to 50, 60% of all transactions confirmed. And that's kind of what we saw in that transaction count momentum. We're up at all-time highs. Previous was like 350,000 per day. Now we're at 550. That's because we're stuffing more data into the witness section. This here is kind of telling us that we're, 50 to 60% of all transactions are inscriptions. It's just kind of interesting. And in many ways, it's using block space that was previously of low demand. It's using the cheapest block space, which is why fee pressure is climbing, but not really to a great extent. It's paying fees, but they're fee sensitive. Because it's an inscription, the transaction is actually a little bit larger than normal, but you're stuffing it into the witness, which gives you a fee discount. So even so, because the data is still large relative to a monetary transaction, you have to pay more. So these inscriptions are fee sensitive. They want to buy the cheap block space. They don't want to buy the expensive block space. This chart I find absolutely fascinating. This is the average transaction size in bytes. We persisted for pretty much, let me stick this on the full history. We might have to do a little bit of a zoom, yeah, because the early years were pretty funky. But we essentially held this like 550 to 600 bytes for most of Bitcoin's history. So the typical monetary transaction is like 500 to 600. This spike here to 1.4 kilobytes, this is the emergence of images. And then this is the emergence of inscriptions. Because they're so small, I mean, a text file is insignificant in size, but we're stuffing more into the block, more transactions at a smaller data footprint. We've actually got a all-time low or near all-time low of 480 bytes per transaction. It's just, it's really interesting. Again, it really speaks to this buyer of cheap block space, and we're tucking data away inside. I mean, people are willing to pay the fee, so it's paying miners. It is a part of this miner security question, which I find quite intriguing. Now, in terms of the amount of data that they're actually taking up, it's like 10% of the block. So it kind of shows you how small and compact they are. And the way to think about this is I don't believe that inscriptions are pricing out monetary transactions at all. Essentially, it's like this, I don't know how to describe this. It's almost like cotton wool. Imagine you've got cotton wool at the bottom of your block, and once you've put all your monetary transactions in there, you just stuff as much cotton wool in there as you can until the box is full, zip it up, done. That's what inscriptions kind of are. They're like this soft, spongy cotton wool where if there's not enough room, then you leave the cotton wool out, you pack it up, and you put it in the next block. The monetary transactions are getting confirmed and filling 80 to 90% of the block, and there's 10% of this padding around it. Now, this is where it gets really interesting. They're filling up only 10%. It's like that cushioned zone around the outside of the block. But in terms of the fees that are being paid, they're paying something like 20% of the fee. So again, this to me feels like inscriptions are they're not pricing out monetary transfers. Monetary transfers are the ones that are, and there's actually an interesting distinction here. Monetary transfers include people who are buying ordinals because they are sending, I don't know, for ballpark's sake, they're sending 0.01 Bitcoin for a script inscription, which is like 10K sats. So they're buying the thing imprinted, the graffiti, essentially. They're buying the graffiti. That's a monetary transfer. They may be willing to pay a higher priority fee because they're sending money to purchase something. It just happens to be another UTXO. But the interesting dynamic here is they don't seem to be pricing out the rest of the transfers. So it's kind of like this baseload demand. Now, it does remain to be seen whether this persists. And again, I think within about 1 or 2 months, whenever that SATS BRC20 stops minting out, because apparently that's quite significant, whenever that happens, we will see whether this is a sustained trend. If that drops off, then maybe we're probably going to move on and we'll see something else. I mean, I'm sure inscriptions will always be there, but it's going to be really interesting to see what happens as this moves forward. But if it is sustained, basically means we've got this cotton wool around the blocks, which is paying a fee and just filling up the space that, quite frankly, nobody else was using and paying a fee to do so. And I think all of this is actually quite constructive. The more I've thought about it from both a philosophical, a technical, they're doing absolutely no harm. And actually, just a case in point in terms of harm, this one here, this is a projection that we made, basically saying, okay, look, inscriptions are going to make the blocks heavier. The red line was what happens to the Bitcoin blockchain size, like in gigabytes, if we fill it with all blocks are like 2 megabytes. Down here was the 2.5, which is when the image metrics, what are they called? Image inscriptions came out. That was the average size. And the purple is what it previously was, right? Typical is 1.35 megabytes. The blue is what we've actually done, right? We're on the lower bound of the lower bound. So really the blockchain size increase is kind of insignificant. So there's no harm and there's kind of only good. It's a bit of a time capsule. I like it from the philosophical standpoint. And we're just putting cotton wool around the blocks, which I think is kind of interesting. It's paying miners extra fees. I mean, again, we'll see if this actually sustains and lasts the test of time. But I thought it was an interesting little exercise to just go through this. You can see that the mempool's congested, activity is up, but volume's down because 10K sats is insignificant. But what we're really seeing is that there's this demand for inscriptions, and we will see whether this stands the test of time. It's going to be interesting. Maybe, just maybe, we're going to see some really interesting designs that use this technology that no one's thought of yet, right? Come the bull market, there could be some really weird stuff that happens on Bitcoin, and I'm kind of excited. I'm kind of here for it, right? I think it's going to be it's definitely going to be different, right? And sometimes that's good. So anyway, hopefully that's a useful session. Let me know if you've got any comments or thoughts. I know Inscriptions, there was a time when we were all kind of umming and ahhing, working out, is this a scam? What is this? But the more I've looked at it, the more benign I really think it is. And overall, I actually think it's a net positive. So anyway, let me know what your thoughts are, and have a great weekend. See you next time. Cheers.